Hey guys, and welcome to the Working Money channel. We've got more and more stories of people publicly sharing regret for selling their XRP. I don't know if you guys remember David Portnoy. Well, he certainly regretted it. This courtesy of Moon Lambo here, expecting more of this moving forward. Hodl life, son. I've never sold a single XRP in my entire life, and I've been holding since November 2017. My average buy price is 25 cents. Again, this courtesy of Moon Lambo. Guys, here's another story retweeted out by the crypto philosopher. Listen to this.
In 2020, I purchased a very large sum amount of XRP. It was literally going for like 60 cents at the time. And it's been sitting there for the last 5 years. And before I left to Europe, I decided to pull it out because I was like, I want to really splurge and have a good time with my little sister. Why the f- did I do that? That was possibly one of the worst financial decisions I have ever made in my entire life. And I've made a lot of dumb financial decisions. This one has to top it off. I am so upset at myself. So upset. Because I bought it at 60 cents. To see it go almost to like $3.50 is a huge profit. I'm so upset at myself. I am like banging my head. I don't even talk to my ex-boyfriend, and I feel like calling him and letting him cuss me the fuck out. Because this man literally told me, hold on to it, wait till the lawsuit hits. It's gonna change not that it was gonna change my life, like that, but it was gonna be a good chunk of change if you just had patience.
A good chunk of change if you just had patience. I hope, we don't hear more of these stories. There are a lot of new people in the XRP community, thinking to themselves, that is a good profit. But 60 cents to $2 and some odd cents. I mean, what is that roughly? If I were to take it at 60, let's say, and, if somebody sold at $2.50 or $2.25, I mean, we're at 270%. I mean, now XRP has gone up since that time about 470%. So, and prices are likely going to go higher. We have not even seen the euphoria phase yet. For more information, guys, though, on, my perspective on this market, you can follow me at patreon.com/workingmoneychannel. Prices have rolled back to $5 a month only. You have to subscribe and stay subscribed, though, to lock in those prices. Guys, the market is heating up. And, if we do see 1, 2, 3 legs up, we have to be prepared to cash out at the appropriate time. Follow me, patreon.com/workingmoneychannel. If you guys want to see what I'm doing, I'm also going to be holding a live Q&A event for my Patreon subscribers only this Sunday. So if you guys haven't joined yet, that's coming up on Sunday, on top of more updates in the crypto space. So XRP, this is the thing, right? We keep moving up. We're breaching all-time high for XRP. We're at this precipice now, right? We're the former all-time high. Right around here. It was back in January of this year, $3.40. Here, let me remove some of that. Let me throw that on the 4-hour, and let me put that on auto. Now, guys, we are really just kind of bouncing off that former level now. So now we are building support on former resistance. And the XRP chart looking very, very exciting for those, especially for those who have cost averaged under $1. But, even if you decided to buy at $2, this is looking very bullish. I know today is a bit of a down day, but guys, it's not going to be that way for long. Currently, one XRP going for $3.45. We're waiting for Bitcoin to pop to the upside. That is the first step. And then who knows how high XRP can go from there. Anyway, wanted to thank Moon Lambo and the crypto philosopher for pointing that out. Krypton Writer also commenting on the bull run. Call me crazy, but this supposed bull run feels absolutely nothing like the one in 2017. Just so you understand the magnitude, back then people were downloading apps that's only purpose was to see their portfolio value on their screen changing upwards with cute animations every few seconds. So if you guys weren't here at that time, it was wild. There were companies created and names temporarily changed to something like crypto/blockchain just to be aligned with the hype. At that time, people were saying XRP would reach $100 at minimum in a few days. You could throw money at any crypto asset and make a profit before they collapsed. We either grew up or this bull run hasn't even started yet. So that's an interesting observation, guys. Could the real FOMO be coming around the corner? He says, I refuse to believe that crypto is boring. So what is left? I think we have matured a bit, if I'm going to be honest. I don't think we are totally in this crazy world anymore. It is certainly not the Wild West. We have real-world partnerships that are really changing the face of cryptocurrencies. And, the cryptos that are going to solve real problems, those are going to be the ones that flourish. As I've said for years now, Ripple and Archax did partner last year to bring hundreds of millions of dollars worth of tokenized assets, or RWAs, on the XRP ledger. And today, Archax just announced something new. Here's the announcement, guys, from Archax. We're excited to announce our acquisition of Germany-based digital asset manager, and then they tag them here, Deutsche Digital Assets, licensed under BaFin. And so they say acquiring DDA will extend our regulatory footprint into Germany. Specifically, it will allow us to add advisory distribution, portfolio management, and contract brokerage permissions to our EU regulatory stack. DDA and Archax have been around for several years developing complementary products. So this is a natural step for both businesses. Archax has been tokenizing traditional assets, whereas DDA focuses on giving regulated exposure to cryptocurrencies. With the updates from the FCA about lifting the ETP ban, Archax is now positioned to facilitate increased access to digital assets. These guys are tokenizing on the XRP ledger, and now they are expanding into Germany. Wrath Economist says extending a regulated presence into Germany. So DDA offers crypto assets, ETPs, white labels, brokerage services, etc. And there's the reference link there if you guys want to check that out. I will link this in the description of the video if you guys want to catch that. I mean, I link everything in the description for those of you guys who want to read everything in more detail. Ripple is also a member of the ABA, but Circle is not. This is interesting considering the American Bankers Association just came after companies like Ripple and Circle the other day. This means that only one crypto company can be considered a bank. They will not be able to stop what's coming for Ripple and XRP. The storm is here to stay. Ripple will be the world's largest bank. This coming from Unknown DLT. Every step of the way, Ripple has been making the right decisions. I have to say, becoming part of these organizations, deciding to partner with strategic partners, not just anybody. Here's another one, Bill Demchak, CEO of PNC. You got to remember, back in 2019, PNC became the first U.S. bank on RippleNet. The bank joined the blockchain payments platform as early as September 2018. This was put out in August of 2019. But at that time, guys, PNC Treasury Management did go live with RippleNet, becoming the first U.S. bank to process cross-border payments for its clients using the blockchain platform. RippleNet, which PNC joined in September of 2018, is Ripple's growing global network that allows financial institutions to process customer payments anywhere in the world reliably and cost-effectively. This is, of course, before the lawsuit, but it seems that this early Ripple partner is now really vying to get into the space in a meaningful way. Here's a clip from CNBC. Listen to this.
PNC announcing a strategic partnership with Coinbase this hour, expanding access to digital assets for their banking clients and their institutional investors, providing some banking services for Coinbase. Our Leslie Picker brought us that news earlier this morning and joins us now alongside PNC CEO. Morning, Leslie.
Hi, good morning, Carl, and thank you, Bill Demchak, for joining us today.
Thank you for having me.
On the heels of this news, and we're here in Washington, of course. I'm just curious. You mentioned in the release that you have plans to develop an initial offering allowing clients to buy, hold, and sell crypto. What does that look like exactly? Is this a stable coin? Is this a deposit token? Any more color you can share?
Yeah, so think of the business we're in. We help people save, spend, invest, borrow, move money. In crypto, stablecoin, in theory, is going to be a payment rail, and our clients are going to want to use it, and our job is to empower our clients to move money. How they do it, and then, whether it's pure retail, whether it's wealth, whether it's our corporate clients on international payments, remains to be seen, but it's our job to empower them. We don't want to lose that stream of their payment flow. So, we put that in our toolkit and let our clients use it if they want.
How much of this was driven by last week's events with Crypto Week and some more regulations surrounding this space? Or
we actually went down the path with Coinbase several years ago to do something similar. And, we're enabling digital payments through Coinbase on our systems, and we're also using our bank capabilities for fiat, our treasury management services, for them. So we're doing two things at once. But we looked at this a bunch of years ago, and then we kind of had the crypto winter, and we had prohibitions from regulators to, even spell crypto, and everything went on hold. And, now we've got the Genius Act through. and there's progress, and the regulators, OCC and so forth, have dropped their restrictions on our ability to work with crypto, so off we go.
So do you think this is something that's going to be done unilaterally? PNC has their own kind of stablecoin situation. Your peers have their own, or is it a consortium thing that is required for more uptake?
Two different questions. So Coinbase is our backbone. On that backbone, if there is an industry-led stablecoin, it could be traded in that wallet. Or any of the other ones. So we're not making a decision. We're not going to produce a stable coin per se, certainly not in our own name, but we'll be a wallet, a provider for any coin that any of our clients want to use.
That's what it's going to be about. It's going to be about the integration, making it seamless for the clients, as you guys heard it from Bill Demchuk. They're not going to produce their own coin. That is redundant. When we've heard JP Morgan saying, well, we're going to create a JPM coin or whatever, it's useless. We don't need all these stable coins. So an interesting clip there. Wanted to thank Digital Asset Buy for posting that. And so with the signing of the Genius Act, we're seeing more customers, companies, retailers, platforms, and tech firms explore whether they need their own stable coin or not. This courtesy of Jack McDonald. Now, he was working at Medico, which is now Ripple Custody. He says, but let's be clear, launching a stable coin isn't the launching of a new app. It's infrastructure, and getting it wrong has real consequences. A stable coin isn't a product extension or a brand feature. It's a financial infrastructure, and it comes with deep responsibilities, compliance, liquidity, interoperability, and trust. And so what are most of these companies hoping for? Avoiding credit card swipe fees, faster settlement and fewer intermediaries, loyalty tie-ins or closed loop spend, potential new revenue from interests on reserves. These are valid business goals, but only part of the picture. The problem, guys, most of these models are built for limited single ecosystem use, walled gardens, useful only within one brand. No interoperability, no liquidity, no programmability. We need less of this fragmentation in global finance, not more. And so here's where branded stablecoins fall short. Limited liquidity outside the brand, complex integrations with external systems, no incentive for third-party adoption because they're built for single-use cases. Minimal utility for customers or enterprises. There's also the trust factor. If you're issuing a stablecoin, you need clear, auditable reserves, and I think he's making a case for the RLUSD here. You need regulatory alignment. You need enterprise-grade risk management. That's not a marketing project. It's serious financial infrastructure, and that's exactly what Ripple has done. While the U.S. has deep financial infrastructure, many global markets don't. Stablecoins can unlock USD access, speed, and inclusion where legacy systems fall short. That's where the need is most urgent and where the opportunity is the greatest. So the bottom line, stablecoins aren't just a payment shortcut or a brand feature. They're a foundational layer of modern financial infrastructure, and they need to be built accordingly. At Ripple, we are doing just that. So making sure that the public realizes that the RLUSD is the preeminent stablecoin that hopefully most financial industries will use. I mean, I guess we cannot say that for sure, but, Ripple is angling to be that preeminent stablecoin. I mean, they've been printing off a lot more over the last few weeks. So my thoughts are that more companies are deciding to use the RLUSD. Vandal guy's also posting this. Him and his brother did just recently interview Edward Dowd, okay? This is what Dowd had to say about the beer flu. It being a cover-up for the 2019 repo meltdown. Listen to this.
Do you have any thoughts on that, on the debt refinance cycle that's been going on since 2009?
Going into 2019, we had a synchronized global slowdown occurring. There was a repo crisis, and that's the plum. Repos are overnight lending between banks and the Federal Reserve. And that's the plumbing of the system. And that started to unravel in the fall of 2019. And then lo and behold, magically came along, and this crisis allowed and gave central banks and governments license to spend like drunken sailors. So Federal Reserve printed money and the US government spent that money. Again, printing money doesn't really matter until it gets into the system, and that was via the fiscal deficits that exploded and the free money that people got during. That created, for the first time, actual inflation. The inflation since 2009 prior to that was asset inflation. This created actual goods inflation, and then the Federal Reserve went on its unprecedented monetary hike cycle, the fastest rate hike cycle we've ever seen.
I mean, it all kind of plays into this theory that XRP has been waiting in the wings, ready to take over. If in fact this was a coordinated meltdown and the beer flu was there to cover up. So here's another clip of Ed Dowd, okay, from Verson and Vandal. He shares his take on how XRP and the XRP ledger are playing a critical role in enabling the tokenization of gold and other hard assets through the use of stablecoins.
With distributed ledger technologies, there's one specific one called XRP. I think it's a very interesting one. It seems to be gaining a lot of quiet traction. It's not as talked about on the mainstream news or by most economists these days, even though I think it's playing such a critical role in where this is going for cross-border settlement rails. Do you think there's some sort of strategic plan to bridge hard assets like gold, for instance, with these digital networks?
Yeah, there's a lot of talk of tokenization, and there are people trying to tokenize gold and other assets, and it's going to be interesting to see how that works. The term smart contracts, what have you. XRP has the rap of being the banker's crypto. You know, you got to look at that with a little skepticism, but there's definitely this notion that we're going to tokenize everything.
All right. I mean, the banker's crypto, I think we've heard that once or twice before. But this notion that we're going to tokenize everything, how big is the network going to get? And guys, how much demand, essentially, how much demand can go through XRP? And what does that actually mean for the crypto price dynamics? Well, Coin Club Quincy made an appearance on Jake Claver's show talking about just that, guys. I wanted to play you this clip too. Listen to this.
People are so used to looking at businesses and valuing them via market cap. But as far as the volume on a network is what's going to drive price of the underlying native asset that's going to facilitate those transactions.
You can actually look at this in any other market or any other asset. Like look at oil. It doesn't matter how much oil there is in the world. What matters is how much oil is being traded currently in the world. And if there's a higher demand in oil to be traded, you're going to see a spike in price solely based on the fact that there's only so much. This is where people get so hung up on like tokenization and how many assets and what's the total supply and all that. But there's an element of, but fundamentally speaking, if more people demand a limited supply of a certain good, there's going to be an increase in the price of that. The only difference between oil and cryptocurrency is the demand in the supply, the demand in the asset comes down to the demand in volume for assets that are tokenized on chain, while the current, I guess you'd say, native asset is used as a form of capital to exchange those assets that are being exchanged on chain, that trade volume.
So did you hear that, guys? Oil, if it's traded, it's the price is reflected in how much oil is traded, not actually how much oil exists. But if you think about tokenization and if you think about XRP in relation to this, it's going to be about the volume. This is what Quincy said, the volume of what's actually traded. And if you think about RWAs, you think about just the sheer volume of what we're going to see. Real world asset tokenization. Now, I mean, not every single thing is going to be tokenized on the XRP ledger, but because of partnerships like the Archax partnership, Ondo Finance, and there's many more of these, this is going to drive up demand for XRP, which essentially should theoretically drive up price. So, as we're seeing an XRP at $3.44, and I know it feels good, but this is just still the beginning, guys. For more information on what I'm going to be doing for this particular bull run, follow me at patreon.com/workingmoneychannel. I've rolled back prices, $5 a month. I think you guys wanted that. So subscribe and stay subscribed to lock in the $5 price point for a limited time only. If you guys are interested in maybe supporting the channel in a different way, I also have the Working Money Channel merch store. You can buy some Working Money Channel merch. I got hoodies, I got t-shirts with the Working Money Channel logo. Link is in the description of the video. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.